Pound just crashed through last week's low. Institutional traders are loading up on dollar longs and GBP shorts ahead of the Fed and BOE. Every single moving average from the 5 to the 200 is now bearish. RSI just hit 29, deeply oversold. That is the danger zone and the opportunity. Here is one danger zone and one hidden opportunity right now. I will show you both. Here is the setup, 1.3283 printed overnight. Sellers broke the 61.8% Fibonacci retracement of the entire rally from June 23 to the July high. The question is not whether this market is bearish. It is. Every single moving average from the 5 period to the 200 period is now flashing sell. On-screen text, first 15 seconds, large contrasting font 1.3283 trap, 2 scalps plus 1 swing. The question is, do we get a corrective bounce first, or does the selling accelerate straight to 1.3218? Stay to the end. I am giving you 2 scalp plays and 1 swing trade you can execute today, plus the one headline that flips everything. Let me call this immediately. Pound sterling to US dollar is in a strong sell bias across every time frame. Weekly trend, strong sell. Daily trend, strong sell. 4-hour trend, strong sell. 1-hour trend, strong sell. There is no debating the direction. But here is what most people miss. The 14-period RSI just crashed to 29.29. That is deep oversold territory. We have not seen levels like this since the June lows. So while the trend is undeniably bearish, the velocity of this move is extreme. Write this number down, 1.3305. That is Friday's low and the former support level that now becomes the first line of resistance. If we break back above 1.3305 today, the entire structure resets and we are looking at a short squeeze rebound. The herd is positioned for more downside. Morgan Stanley just reported that investors have increased dollar longs and GBP shorts ahead of this week's Fed and BOE meetings. Chichen Ding Jia Su Jushan Shi. Investors added long dollar positions and short sterling positions. The asset managers are long euros and short pounds, while levered funds are long pounds and short New Zealand dollars. That crowded short position is exactly what creates the squeeze risk if we get any hawkish surprise from the Fed or dovish disappointment from the BOE. The micro insight here is the stop cluster. Retail shorts are building above 1.3300, but institutional shorts are layered above 1.3326. If we get a bounce that triggers those stops, the covering could be violent. Let me walk you through this chart from the top down. Weekly time frame. Pound sterling to US dollar peaked on July 15th. With 4 trading days left in July, sellers now have an opportunity to erase the entire month's rally. The question into month end is whether they can complete a 100% retracement of the move higher from the July low daily time frame. The pair is trading below the 20-period MA at 1.3326, the 50-period MA at 1.3324, the 100-period MA at 1.3347, and the 200-period MA at 1.3406. All 12 moving averages in the investing.com analysis are flashing sell. That is a bearish moving average alignment of the highest conviction. The 14-period RSI on the daily is at 29.29, technically oversold. But oversold does not mean reversal. In strong trends, RSI can stay oversold for extended periods. The MACD histogram is negative below the zero line, confirming bearish momentum dominance. 4-hour time frame. The ADX sits at 34.61, indicating a strong trending environment. The CCI is at -116, deep in oversold territory. Williams %R is at -90.9, also oversold. The bull or bear power indicator is negative at -0.0040, confirming bearish control. 1-hour time frame. We have a clear change of character from bullish to bearish structure. Strong displacement through short-term support has left behind a bearish fair value gap and an order block in the 1.3324 to 1.3344 zone. Here is what most traders miss. The 1.3299 level was not just last week's low. It was the 61.8% retracement of the entire rally from the June 23 low to the July high. That is a high probability Fibonacci level. When it broke, it triggered a cascade of sell orders that drove us to 1.3283 on-screen text. Next target, 1.3261, the next downside target is 1.3261. A break below that shifts focus to the July 1st low at 1.3218. If sellers achieve that, they have completely erased July's rally, a 100% retracement. Just this morning, Investing.com's pivot point analysis shows classic support at 1.3286 and pivot at 1.3290, with resistance at 1.3293 and 1.3297. The pair is trading right on that knife edge. Resistance levels: 1. 3305, Friday's low, former support, 1.3326, Monday's intraday high and 20-period MA, 1.3341, core resistance zone. Support levels: 1.3283, overnight low, 1.3261, next downside target, 1.3218, July 1st low. Cross asset linkage. The US dollar index is holding above 101, trading at 101.28 with the 50-day EMA at 101.12 providing support. Resistance sits at 101.65. As long as DXY holds above 101.06, bulls remain in control. That is a headwind for GBP or USD. Yields matter here too. US headline CPI remains at 3.5% year-on-year, while producer prices are 5.5% higher than a year ago. The Fed minutes showed several officials believe there is already a case for another rate rise. The Fed has put rate cuts back in the fridge. Meanwhile, UK inflation cooled from 2.8% to 2.6%, regular wage growth slowed to 3.4%, and unemployment remains elevated at 4.9%. The policy divergence is widening. Let me connect the last 24 hours of news directly to price action. News catalyst number 1. The US paused its bombing in Iran, which dragged oil prices lower and lifted investor confidence ahead of a busy week of central bank meetings. Oil dropped about $10 from last week's peak. Cheaper oil improves the UK growth outlook, but that benefit has been completely overwhelmed by technical selling. News catalyst number 2. Bank of England Governor Andrew Bailey expressed explicit concerns over cooling UK labour market conditions, stating that monetary policy easing space will gradually open up as inflation returns to target. That is a dovish pivot from his previous stance. Markets now expect the BO to keep rates at 3.75% this week, but the pace of future easing may be faster than anticipated. News catalyst number 3. Morgan Stanley confirms that investors have added dollar longs and sterling shorts ahead of this week's meeting's option pricing data. Statistics increased long dollar positions and short sterling positions. The asset managers are long euros and short pounds. News catalyst number 4. The Fed meets July 28th to 29th, followed by the Bank of England decision, US GDP, and US PCE on July 30th. That means volatility could become absolutely feral. Build the narrative web. The policy divergence battle is real. The Fed is holding firm with inflation risks tilted upward. The BO is preparing to ease as the labor market loosens. This is the widest policy gap we have seen in months, and it is driving the dollar higher. The 1 to 2 week directional lean, bearish below 1.3305, bullish above 1.3361. That is the line in the sand. A sustained 1-hour close above approximately 1.3361 would invalidate the bearish continuation thesis. Do you think the dollar breaks 105 this week? Comment yes or no. I am tracking consensus. Just this morning, a Bloomberg poll and UOB economist Lee Su and both expect the BO to keep rates at 3.75%, with modest upside risks to further tightening but no imminent move given softer demand and a loosening labor market. HSBC sees downward pressure for GBP USD given easing inflation and weaker labor market. Data. The institutional consensus is clear. Sterling faces headwinds. Most people skip this section. That is exactly where the money is made. Keep watching. I am giving you 2 scalp strategies and 1 swing strategy. These are not hypothetical. These are executable with exact entries, stops, and targets. Strategy 1. The opening scalp. Scalping. High probability. This is for the London session breakout. The Asian session has established a tight range between 1.3283 support and 1.3305 resistance. London opening will determine the breakout direction. The trigger. Wait for a valid breakout of the Asian range with confirmed volume expansion. If price breaks below 1.3283 and prints a 5-minute bearish engulfing candle with the 15-minute RSI breaking below 30, you have a sell signal long version. If price breaks above 1.3305, Friday's low, former support now resistance, with a 5-minute bullish engulfing and 15-minute RSI breaking above 40, you have a long scalp signal. The exact trigger condition: price must have a full candle breakout with closing price beyond the level. No wick breaks, full body closes, tight stop loss, 2 to 3 pips beyond the breakout candle's extreme, take profit 1, 20 to 30 pips, targeting the next structural level optional TP2. If momentum extends, trail to capture additional move. What instantly voids the scalp? A 5-minute candle close back inside the range invalidates the breakout, the opening scalp short scenario entry. 1.3280, 5M bearish engulfing below 1.3283, stop loss, 1. 32.95 take profit 1. 1.3261 risk, reward, 1:1.5 invalidation, void if 5M closes back above 1.3283 long scenario entry, 1.3310, 5M bullish engulfing above 1.3305, stop loss, 1.3295 take profit 1. 1.3326 risk, reward, 1:1.6 invalidation, void if 5M closes back below 1.3305 strategy 2. The liquidity grab, scalping, counter noise. This is the counterintuitive play. The market is deeply oversold. RSI at 29.29, Williams percent R at -90.9. That does not mean buy blindly. It means watch for the liquidity sweep. The setup: sellers will likely push price down to sweep the stops resting below 1.3283. The 1.3261 level is the next obvious target for a stop hunt. The entry: after a fake breakout below 1.3261, wait for a snapback confirmation, a bullish engulfing on the 5-minute or 15-minute chart with RSI divergence. That is your long entry stop placement, just beyond the wick low. If the fakeout low is 1.3255, place stop at 1.3245 fast, singular target, the nearest intraday liquidity pool. That is 1.3299, last week's low, now resistance. The bounce from oversold conditions could retrace 50 to 61.8% of the move warning. This requires fast execution. The liquidity grab happens in minutes, sometimes seconds. You cannot hesitate. The liquidity grab entry, 1.3265, 15M bullish engulfing after fake below 1.3261, stop loss, 1.3245 take profit 1, 1.3299 risk, reward, 1:1.7 invalidation, void if 15M closes below 1.3261 with sustained momentum. Are you scalping or swinging this week? Comments scalp or swing. I want to see where this community sits. Strategy 3. The session swing, trend alignment. This is the big one. Based on the 4-hour and daily bias, we are looking for a continuation short that captures the multi-session move toward 1.3218. The logic: the trend is bearish across all timeframes. The 1.3299 level was the 61.8% retracement of the June-July rally. That break confirmed sellers are in control. The next major target is the July 1st low at 1.3218. Trigger condition: a 4-hour close below 1.3283 with bearish MACD momentum and RSI remaining below 40. Entry on pullback. Wait for price to retrace into the 1.3299 to 1.3305 zone, the broken support now resistance, and look for bearish rejection on the 1-hour chart. A bearish engulfing or shooting star in that zone is your entry, stop loss. Place above the 50-period MA at 1.3324. If price reclaims that level with a 4-hour close, the bearish structure is compromised. Use 1.3335 for a margin of safety. 2 targets, conservative swing target, 1.3261, the next downside level, stretch target, 1.3218, the July 1st low, 100% retracement, trailing stop rule. Once price reaches halfway to TP1, around 1.3272, move stop to break even. Once TP1 is hit, Trail stop to 1.3283 to lock profits. Explicit invalidation level. A daily close above 1.3326 would shift the medium-term outlook from bearish to neutral. The session STRNG entry. 1.3299 to 1.3305. 1H bearish rejection after pullback. Stop loss. 1.3335 take profit 1. 1.3261 take profit 2. 1.3218 risk. Reward. 1 minute and 2.2 seconds, 2. TP1, 1 minute and 3.5 seconds, to TP2, invalidation. Void if daily closes above 1.3326. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. Position size accordingly. No positions through high impact news. The FOMC decision, BO decision, US GDP, and PCE are all within 48 hours. Stops are non-negotiable. This is how you survive to trade the next big move. If you are trading the London session, widen stops to 1.5x Asian session levels. The first 30 minutes of London opening have high fake breakout probability. Wait for confirmation. This is not a recommendation to gamble. This is a structured trading plan with defined risk parameters. Execute with discipline or do not execute at all. Let me summarize the single most critical level for the next session. 1.3305. That is the line. Below it, sellers remain in full control. Above it, we are looking at a short squeeze rebound toward 1.3326 and potentially 1.3341. The 1.3283 level is the immediate support. A break below that opens the door to 1.3261 and then 1.3218. If this level breaks, 1.3218, the July 1st low, the entire monthly trend flips to a complete retracement of July's rally. I will have the updated blueprint 24 hours from now. If you want the full breakdown on Aussie dollar, Japanese yen, Nike 225, those videos are live now on our Alpha Market Meridian channel. Gold, Nasdaq, and Bitcoin are published on the Market Meridian channel. Please click the link at the top of this channel's homepage to access the complete institutional suite. Tap the end screen to jump to the gold melt-up analysis and then loop back to today's Nasdaq gamma flip later. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter. The Fed meets tomorrow. The BO meets Thursday. GDP and PCE hit Thursday as well. This is the most volatile week of the month. Do not get caught flat-footed.